Welcome to TradeTheNBI.com. This is John, this report is for the 19th. Well, the little slow melt up continues. I mean, we expected a little softness, which we got. Just came back a little bit into it and pretty much traded sideways across, but still keeping intact with the bullish overall, still rising shakeout. And everything else is rising too, including the ABM now reaching the 3100 mark. If we look at a 50K chart, which I wanted to show the other day, that one had purchased all the way back down there at the 3090 range. So depending on how this proceeds, I mean, now we've got a complete steel reset right here as we're heading for a potential DOC spread on the 50K. But as soon as that turns around and spikes up, it should be enough to hold it in place. So even if we get some movement back and forth, it still looks reasonably good. Looking at the NQ, even stronger, and no question about that, because it never had the steel cross back above and below. You can kind of see the difference when that happens. So we ended up with a positive NASDAQ where the S&P was just a little bit softer in general. And again, ABM catching up beautifully. So all in all, good shape. Trump talking about negative rates with the Fed chairman caused a nice spike in the euro. Don't know where they're going with that, but certainly would save the U.S. government quite a bit of money if you could get the Feds to just drop to zero rates. Then you'd have no interest on your debt. Wouldn't that be fantastic if you wanted to pay off debt? I mean, instead of spending an extra $300 billion a year in interest, you save it. Actually, I think they're even spending more than that now. USO, oil, so pretty much stagnant, which is kind of just an indication that we're in a status quo status with general economic growth, and that's can be a little bit more on the troubling side because we're not really seeing significant growth. If you see oil prices start to push with demand, then we know that we've got a turnaround, but it seems like things have pretty much stabilized, and of course everyone's talking about the Fed liquidity and needing to pump more into it, so we'll see. But as I talked about, leading up to an election year, you often get a pause from a growth standpoint unless there's a certainty that the incumbent is going to win, and when there's not, people kind of get a little hesitant, and I think that's something you have to weigh into when you're looking at how things are going to unfold going forward. Gold, not really responding off the bottom very well here, and we got the dip below the red line, so we know that that's not going to survive from a pop. Intraday was pretty clean. We ended up moving up to the peaks. Classic DOC spreads, of course, this, you get steel coming from underneath, so you're not expecting a whole lot there. Same situation happens here. It finally crosses, but as it does, by the time it gets to the steel back over cyan, you're all the way back down to the 23%. And then I posted right in about there because we had the dip below the red line, so I'm like, even in this pop, we know we're coming back to the lows, which in fact we did. And then it kind of stabilized, and then we ended up with P2 and get the nice green cross, orange below. And you could even wait to the open of this one because literally after this close, when the bar opened up and started, the green was already above. Now that's a little early because you're catching it before close of a bar. So even if you wanted to wait, it certainly came back down and filled it. And this is something that happens an awful lot, but it happens with the shorts too. I mean, you see the signal, you think you've missed it. But when you get these kind of indications, you know that no, it's probably the beginning of it. You might have to wait a little bit longer for that secondary signal. And then that takes us to the current move, which is just right back up to the peaks with a little dip there. And then boom, the inversion with the cross right here on a nice big bar that literally brought it right back up to the exact same spot. And then has proceeded from there. No positive extremes yet. We filled the dip below the red line here, but we made a new one just right at this other previous algo that we had just had created from a day or so ago, was the 3117 range. So it's kind of the benchmark going forward right now. Well, that's the long and the short of it. As always, I will be putting up more charts now that I've got my TS all the way back up here and charts active, so we'll go from there. Trade well. We'll talk again later.